You open your banking app. You just stare at the number, hoping the minus sign in front of it will somehow magically disappear if you just blink hard enough. But it doesn't. You overdrafted by $4. Just a forgotten coffee, and the bank, well, the bank doesn't care. It only cares about the math. In that moment, you feel a wave of something that isn't even anger anymore. It's just deep, bone-weary exhaustion. Welcome to this explainer, where we're going to map out the invisible mathematical architecture of exactly how banks treat you.
Okay, let's dive into this. At -$4, you're looking right at the baseline cruelty of bank math. $35. That is the fee. The bank literally just took $35 from you for a $4 mistake. Think about that for a second. The penalty for being broke is simply that you become more broke. The fee is astronomically bigger than the mistake itself, and there's absolutely no one coming to help you. You are completely, utterly alone with the math.
And look at how fast this snowballs. You're already negative, right? You're feeling the heavy weight of that first fee. Then, a $7 subscription you completely forgot to cancel processes. The system sees you're already in the red and instantly hits you with another $35. Boom. Now you owe $77 to an institution that just punished you for a $4 error. And the next morning, your rent payment fails. The landlord tacks on a $75 late fee. Your phone bill bounces, adding another $25. The math you couldn't fix at $4 is now $200 deep, growing frantically in all these directions you didn't even authorize.
So you walk into the branch to try and fix this whole mess. At -$4, the teller looks at her screen and her face just changes. It's not anger. It's not even pity. It's something much colder. You watch yourself stop being a person and start being a flag, a category, a risk score with shoes. You are a problem to them. But what happens when you finally claw your way back to a positive $200? You walk in, and the teller has this trained, perfectly polite smile. You're moved through the process in exactly 40 seconds. You exist on their books, sure, but you don't exist in their attention. You were processed exactly like luggage on a conveyor belt.
I mean, really think about what it took to get to that $200. 20 hours of overtime. You skipped meals. You managed to keep the account positive for one whole week. You actually did it. But the bank notices in the worst way possible. A maintenance fee hits anyway. $12, maybe $15, just quietly withdrawn in the middle of the night. Why? Because the minimum to avoid it is $1,500, and you obviously don't have that. The system doesn't explain a thing. It just executes. You are literally paying a bank to hold the money you barely have.
And this brilliantly illustrates how the institution actually views you at different tiers. At $200, if you apply for a credit card, they offer you a secured one, meaning they demand $300 of your own money just to lend it back to you at a crushing 24% interest. But jump up to $2,000, suddenly you're getting pre-approved cards at 22% without even asking. And at $15,000, the price of money basically plummets. You can snag an auto loan at 6.8%. The bank's willingness to lend entirely dictates the price you pay to live. Let's look a little closer at that $2,000 tier. Something fundamentally shifts right here. Not in you, but in the way the bank looks at you. You start getting consistent direct deposits, let's say $1,600 after taxes, rolling in every 2 weeks. This predictable, steady pattern is literally the only thing about you that interests the system. And suddenly, as if by magic, that $12 maintenance fee vanishes. Not because you asked them to drop it. The system simply saw your direct deposit and waived it automatically. You match a profile that earns the bank money, so suddenly they let you keep yours. But make no mistake, at $2,000, you are simply profitable. You're no longer invisible, which is great, but you certainly aren't respected yet. It's this messy middle ground where most Americans live. The bank cares about what your account looks like because it looks like something they can sell products to. However, when we transition to the $15,000 mark, everything changes. The bank goes from just selling to you to actively courting you. They want to ensure you do not take that $15,000 somewhere else.
Because at $15,000, a real person actually calls you, not an automated recording, not a phone tree, a relationship banker who says his name twice and gives you his direct line. Remember that brutal $35 fee that completely ruined your week back at -$4? Well, at this level, if a $32 fee shows up on your statement, you just shoot a quick email to your banker, and 3 hours later, it's reversed. No holding for a representative, no reading from a script, just a reply that says, taken care of. The very same fees that drained your account for years are now entirely optional.
Which brings us to a harsh, totally objective truth hidden down at those lower levels. The bank wasn't mean to you when you were broke.
The bank was just indifferent. And indifference at scale looks exactly like cruelty. The system is completely, terrifyingly impartial. It simply runs the math. At the lower tiers, you are an account they are invested for. At the higher tiers, you become someone they're actually invested in.
But when the math hits $80,000, things escalate drastically. You are now officially labeled a preferred client. That word is printed on your physical statements, it flashes on your welcome screens. You didn't earn the title by being a good person, the number did the work. When you walk into the branch now, someone with a brass nameplate literally stands up to greet you. They physically guide you past the velvet rope line where everyone else is waiting. The exact same line you used to wait in when you only had $200.
Life as a preferred client is a whole different world. Your dedicated banker, let's just call him David, remembers that you have a sister in Chicago because you mentioned it passingly 9 months ago. That detail isn't an accident, that's corporate training. And you start getting pre-approval letters in the mail for $400,000 mortgages. The bank has already decided what you can afford before you even decided you wanted to buy a house. And if a competitor bank calls you with a better rate, David is going to call you back within an hour with a counteroffer. The bank is now actively defending your account. As we cross into $500,000, the pacing completely changes. The bank stops being a place that you visit. Instead, it becomes a wealth management service that drives to you. David's colleague literally drives to your office with freshly printed reports tucked in a leather folder. They're asking about your tax structures, your estate plans, your 5-year, 10-year goals.
So, the crucial point in that meeting is the shift in strategy. At the end of a 90-minute sit-down, they don't try to sell you a single thing. Because you are no longer being offered products, you're being consulted. A product is something the bank wants you to buy once. A consultation is something the bank wants you to need over time. Because needing them, relying on their expertise, is worth infinitely more to them than you just buying from them once.
Welcome to private banking at $5 million. This isn't just wealth management anymore. This is a highly guarded, exclusive relationship. You don't have a standard banker. You have a private banker, a title that carries massive weight inside that institution. This person manages fewer than 20 accounts total. Yours is one of them. The system flags your name across every single location worldwide. You exist in a global database that prioritizes you before you even have to open your mouth to ask. At $80,000, the rules were nice, but they were still rules that you had to follow. At $5 million, relationships don't follow rules, they negotiate them. You're sitting in an unbranded, sleek conference room with a single-piece wooden table, discussing private investments that will literally never appear on any public prospectus. Investment minimums? Waived. Interest rates? They aren't published. They are custom drafted specifically for you. The bank doesn't follow its own rules at $5 million. It bends them entirely to fit your life because the relationship justifies it. We have arrived at the absolute peak, $25 million. At this level, you don't even have a banker. You have a relationship. And that relationship is literally a named line item in a senior executive's annual performance review. Entire careers inside that glass building depend on your satisfaction. 3 people inside the bank exist on payroll partially just because your account exists. The institution no longer just competes to keep you, it completely, fundamentally organizes itself around not losing you. Now, what's really interesting about this peak is the ultimate reversal of power. Deals are structured around your participation before you even agree to them. The real shift here isn't just about access, it's about influence. The chief investment officer is now calling you to ask for your opinion on emerging markets. The head of private banking flies out to your city just to take you to lunch and ask what kind of products their next tier of clients should expect. You are actively shaping the very institution that once charged you $35 just for being broke. But somewhere, right now, someone is staring at a screen. The number has a minus sign in front of it. -$4. The coffee they completely forgot about was scheduled to charge. The fee is going to hit within the hour. They try to call, and the hold music just loops and loops. A voice finally answers, reading from a cold script, telling them that fees absolutely cannot be reversed. They are caught in the exact same unrelenting mathematical machine. And here is the truly chilling part of this whole explanator. They don't know yet that the system isn't broken. It is working exactly, perfectly, the way it was built to work. The person at $25 million whose advice the bank actively seeks out, and the person at -$4 paying the ultimate penalty for being broke, they are the exact same human being. The institution doesn't change. The bank simply decides who you are based entirely on what is sitting next to your name in their ledger. It is a system built on pure, unfeeling, automated mathematics. So, I leave you with this to really think about today. As you log into your own banking app, who does the math say you are?